Hey everyone, welcome to This Explainer. A lot of you have been reaching out saying, hey, can you create a video for me to provide a summary of this strategy? So that is exactly what we are doing today. We are going to master the IRS rules for the home office deduction. It's a strategy that can literally save independent workers a ton of money, but man, you've got to know exactly how to use it. Because look, it's the million-dollar question, right? Or at least the question that could save you thousands. Can you write off your home office? Well, the short answer is absolutely yes. But the catch? You can only do it if you survive the IRS's incredibly strict gatekeeper tests. It's definitely not a free-for-all. Okay, let's dive into this. We've got a pretty straightforward decision tree today. We'll start with the core home office question, then tackle the W-2 employee wall, move right into passing the space test, figure out calculating your actual deduction, and wrap up with avoiding common IRS traps. So first up, the W-2 employee wall. This is the basic employment test. Right out of the gate, there is a massive divide in the tax code when it comes to your home workspace. On one side, you've got self-employed individuals, partners, farmers. They are potentially eligible to claim this. On the other side, traditional W-2 employees. And if that's you, unfortunately, you hit a brick wall right here. The self-employed folks get to proceed, while W-2 employees are basically stopped in their tracks. And just to emphasize how incredibly explicit the IRS is about this, listen to their instructions for Form 8829 for 2025. It flat out says, you have expenses for business use of your home as an employee. You can't deduct these expenses on your personal return. So reporting this purely objectively, the federal guidance leaves literally zero gray area for traditional employees. All right, for those of you who cleared that hurdle, because you're self-employed, we move to our next gate, passing the space test. Now, what's really interesting here is how the IRS defines exclusive use. It has to be a specific, separately identifiable area used only for business. The cool part? It doesn't actually have to be a completely separate room with a door that closes. But, and this is a huge but, mixed use is going to fail. So if you're working from your dining room table all day, but then eating dinner with your family at that exact same table at night, yeah, that simply won't cut it. Plus, on top of being regular and exclusive, your space has to align with one of three very specific business purposes. It either has to be your principal place of business, a physical place where you actually meet with patients or clients in the normal course of your work, or a completely separate structure used for the business, like a detached garage or an art studio. So, the crucial point here is how this applies to folks who do their main work outside their house. The rules actually say your principal place of business includes your home if you use it exclusively and regularly just for admin or management stuff, assuming you don't have another fixed location to do that work. This is a massive lifeline for service businesses. Think about a plumber or a landscaper, right? They make their money out in the field. But if they do all their billing, scheduling, and bookkeeping exclusively from their home office space, they can absolutely still qualify. Okay, if you've successfully passed through all those strict IRS gates, it's time for calculating your actual deduction. You basically have two paths available here. You can choose the Simplified Method, which is a flat fixed rate, or you can calculate your actual expenses using Form 8829 on your Schedule C. It really boils down to choosing between the easy math route or doing a bit of heavy lifting to track your exact itemized costs. Let's start with the easy route. Under the Simplified Method, the magic number is 5. You get a super straightforward deduction of $5 per square foot of qualified office space. It saves you a ton of time because you aren't hunting down every single utility bill or minor repair receipt. But keep in mind, there is a hard cap at 300. The IRS caps the Simplified Method at a maximum of 300 square feet. Do the math. $5 times 300 square feet, that means your absolute maximum deduction under the Simplified Method is $1,500. Now, let's see how things look if you choose the other path and track your actual expenses. You split these into direct and indirect costs. Direct expenses, like, say, painting that specific office room, those are generally 100% allocable to the business. But indirect expenses? That is where it gets incredibly lucrative. We're talking about writing off a portion of your mortgage interest, your real estate taxes, rent, utilities, insurance, general repairs, and even home depreciation. You just allocate these based on your business use percentage, which is usually just the square footage of your office divided by the total square footage of your home. But, hey, before you get too excited and try writing off half your mortgage, you got to remember the income limit. You cannot deduct more than your business actually brings in. Your deduction is strictly capped at your business gross income. The silver lining, though? If you use the actual expense method, those disallowed amounts that exceed your income limit can often carry forward to help you out in future tax years. Which brings us to our final hurdle.
Avoiding common IRS traps.
Look, if you want to immediately trigger the IRS to deny your claim, just fall into one of these traps. Rapid fire, here they are. Using the room for mixed business and personal stuff. Trying to claim the deduction when you're clearly a W-2 employee. Trying to pass off regular personal household costs as business expenses. And finally, just failing to document your square footage and actual expenses.
Seriously, the IRS has absolutely zero sense of humor about people abusing this strategy. They've actually issued formal warnings, specifically Revenue Ruling 2004-32, calling out home-based business schemes that try to magically convert personal living expenses into deductible business expenses. To make this work, you have to have legitimate business intent, proper space allocation, and meticulous documentation.
So to wrap up this explainer, I want to leave you with a challenge. Look around the room you are sitting in right now. Look at your desk, look at the whole setup. Does this space truly pass the exclusive and regular use tests we just talked about? This is an amazingly powerful strategy to keep your hard-earned money in your own pocket, but only if you play exactly by the rulebook. Take a really hard look at your physical workspace before you file this year. What story is your square footage going to tell the IRS?